Hello and welcome. If you're like me, before you decide to invest in a company, you want to understand its business fundamentals, how it makes money, how much it makes, how it's performing at the moment, and what kind of risks it's facing going forward that may impact its future earnings. So today, I'll be diving into Airbnb's annual report to get answers to all these questions and more. Join me. For starters, what's Airbnb? Airbnb is a two-sided online platform that connects hosts on the one side, listing properties for rent, the supply side, and guests looking for places to stay, the demand side. To a smaller degree, Airbnb also allows for booking of experiences, meaning admission tickets to tourist attractions, excursions, cooking classes, and so on. Now let's understand where Airbnb is present in the world. In the annual report, Airbnb states we're a global platform with hosts in 220 countries and regions and over 100,000 cities and towns, and a global guest community. We also find in the report that for the year 2023, Airbnb booked 448 million of nights and experiences, which represents gross booking value of $73.3 billion, of which Airbnb makes commission. This is an increase in revenue compared to previous years. As for the geographic mix, the most bookings of stays and experiences, 187 million, were in Europe, the Middle East, and Africa combined, followed by the US market with 146 million bookings, further followed by Latin America and Asia Pacific, with smaller but still significant numbers of bookings. It's worth noting that despite not being the first in the number of bookings, the US market is leading in the dollar value of bookings, meaning the US listings bring the most revenue to Airbnb compared to other geographic markets, $4.6 billion. Another thing worth noting is that Airbnb withdrew from China in 2022 after 6 years of operating there, following the challenges caused by the pandemic, local competition, and cultural struggles. Now, Airbnb operates only outbound travel for Chinese customers looking for places to stay outside of China. But even this part of its operations, Airbnb cannot run directly in China because of restrictions of foreign direct investment. So it operates its outbound business in China through contractual agreements with local companies, which, as Airbnb openly states in the report, it doesn't trust very much. Airbnb sums up its expectations from the Chinese market as follows. We will continue to incur significant expenses to operate our outbound business in China, and we may never achieve profitability in that market. Doesn't sound very encouraging. We further learned from the report that for a company with a global presence, Airbnb doesn't have a huge workforce, only 6,907 employees, out of them 2,000 engineers maintaining the platform, plus 11,000 third-party contingent workers to provide support to communities of hosts and guests. The reason Airbnb doesn't need to employ a huge workforce like some other companies that operate at a global scale is because, being a platform, Airbnb doesn't invest in owning and maintaining properties like hotels do. Instead, it's all done by hosts listing their properties on the platform, who play a crucial role in building rich inventory of listings and making Airbnb attractive to guests. That's why it's so important for Airbnb's success to keep hosts happy. According to the report, Airbnb has 5 million hosts globally listing properties on its platform. Here they admit that our business depends on hosts maintaining their listings on our platform and engaging in practices that encourage guests to book those listings. Further on, they also say that hosts often list on our platform as well as platforms of our competitors, which, by the way, is called multi-homing. Now let's take a look at Airbnb's financial results. On the top line, revenue, we see that in 2023, Airbnb earned $9.9 billion, which is an increase in comparison to previous years. Then, looking at the bottom line, the net income, we find that the company has been profitable for 2 years in a row, 2023 and 2022, recovering from a loss it had in 2021, mainly caused by the impact of the COVID-19 pandemic on travel. So what are the major expenses that take away from Airbnb's profits? Here we see that out of $9.9 billion Airbnb got in sales in 2023, $8.4 billion, or 85%, went to cover expenses. Out of those, $1.7 billion went to cover the cost of revenue, which for Airbnb includes payment processing costs, such as merchant fees paid to credit cards and other payment providers on the site, and the costs of data storage, for which, by the way, Airbnb contracts Amazon Web Services. Next, Airbnb spent almost $1.2 billion to cover operations and support costs, which includes the salaries of employees and fees paid to third parties providing community support to hosts and guests. Furthermore, Airbnb spent $1.7 billion on product development, meaning on innovation and maintenance of its online platform, which includes salaries of the tech personnel and costs of third-party tech services. Airbnb also spent $1.76 billion on sales and marketing. Marketing is really important to Airbnb's success. As they say here in the report, we rely on traffic to our platform to grow revenue. In particular, they talk about spending on search engine advertising as the main source of traffic and anticipate having to spend more on marketing in the future due to growing competition. This increasing marketing expense to beat competitors at attracting traffic to the site may take a toll on Airbnb's profits. Finally, Airbnb spent over $2 billion on general and administrative expenses, which include salaries of employees in management, finance, accounting, legal, and human resources departments. So as we can see, the biggest expenses for a company like Airbnb are salaries, technology investments, and marketing. Looking at the profit, which is the net income line on the income statement, we notice that in 2023, Airbnb claimed a large amount of tax credit from the government, $2.69 billion, which more than doubled its net income. By reading the information in the report, it appears that Airbnb claimed this tax credit as a carryover amount due to losses it had in previous years. Now let's calculate the profit margin for Airbnb. I won't take the tax credit into account as it's not something that Airbnb will have every year. So the profit margin in 2023 is $2.1 billion of income before taxes divided by $9.9 billion in sales, which makes 21% profit margin, which is a fairly good margin compared to companies in some other industries. Despite having a profitable business model, Airbnb faces a huge set of risks and threats going forward. The first challenge is intensifying competition. Airbnb must compete aggressively to attract hosts and guests to its site. One large group of Airbnb's competitors is online travel agencies such as Booking.com, Kayak, Expedia, and Hotels.com, who are actively trying to attract hosts and guests to their platforms. Airbnb also competes against search engines who prioritize their own travel services in search results, such as Google and Baidu in China. Another group of competitors is listing and meta-search websites such as TripAdvisor and Trivago. Airbnb also competes with traditional hotel chains, Marriott, Hilton, Intercontinental, and all other hotels, as well as property management companies. Plus, in experiences, Airbnb competes with online platforms offering experiences. So Airbnb faces plenty of competition over both hosts and guests. Another challenge is that traditional hotels and private groups such as homeowners associations are actively lobbying local governments to ban Airbnb from certain areas or restrict short-term rentals, arguing that Airbnb creates a shortage of rental homes for locals. Airbnb's guests disturb the peace of neighborhoods and affect their safety. Unfortunately for Airbnb, more and more local authorities act on this and introduce regulations on short-term rentals that restrict Airbnb's ability to grow. As a result of regulations tightening globally, Airbnb tells us in the report, our revenue growth rate has slowed over time, and we expect it to continue to slow in the future. In addition, there are many other types of regulations that Airbnb is constantly subjected to, including internet regulations on consumer data privacy, data security, online payment processing, taxation, pricing, ethical advertising, and more. And these regulations are different in different parts of the world and are constantly evolving. So the challenge for Airbnb is to keep a close eye on these changes and to comply locally in every country and region where they have listings. Compliance requires costly adaptations of Airbnb technology, for example, adjusting firewalls to comply with security regulations or adjusting tax calculations on bookings. If Airbnb misses something and doesn't comply to existing or new regulations, even unintentionally, the company can be heavily fined and sometimes suspended from operating in a country. Next, Airbnb's financial performance is subject to risks specific to the travel industry. Travel gets impacted by pandemics and localized epidemics, terrorist attacks, wars, as well as backlogs on passport and visa renewals in some countries. Since these events are unpredictable, they can have an abrupt negative impact on travel and Airbnb's financial results. Finally, since Airbnb has limited control over what goes on in its properties in different parts of the world because it delegates to hosts, there is a high risk of negative publicity affecting company name and customer trust in Airbnb, which in turn may decrease usage of the platform. In the annual report, Airbnb admits that there have been cases of shootings, sexual violence, and hidden cameras at properties, which generated negative media coverage and did damage to Airbnb's reputation, and there are no guarantees that this will not happen in the future. So in light of all these challenges, what does the future hold for Airbnb, and how can it continue growing despite restrictions? In the report, Airbnb presents us with a long-term strategy. The key components of the strategy are, on the supply side, Airbnb pledges to grow the size and quality of hosts, which makes sense because, as we mentioned earlier, hosts provide the rich variety of listed properties, which makes Airbnb more attractive to guests. On the demand side, Airbnb commits to work hard to attract new guests and increase the frequency of bookings by the existing guests. Furthermore, the company will continue innovating its platform, adding more features and services. Here they say that they want to perfect their core business, which means Airbnb has no plans to branch out into divisions other than stays and experiences in the near future. Airbnb also plans on continued international expansion while keeping a close eye on regulations in every market they enter. And most importantly, they commit to running a profitable business, which means they will practice cost discipline and will focus on constantly improving the company's bottom line. So the future of Airbnb is not set, and its success will highly depend on management's ability to adapt to changing regulations and technology advancements, growing competition, and challenges specific to the travel industry. Although I cannot give you advice on whether or not to trade Airbnb stock, I hope you found this overview useful and informative, and hope it will help you make wise investment decisions. Till next time.